Afternoon. How are you all doing? How is everybody this fine afternoon? Non-farm payroll day. Exciting. Non-farm payroll. So, unemployment rate this afternoon in just over 10 minutes. We had the couple of bits and pieces this morning. Foreign currency reserves for the Swissy and the construction PMI for the pound, which didn't really do anything. Never do. So all about the news this afternoon. Afternoon, Ian, EMAC. What an afternoon yesterday. Yeah, big moves yesterday. Very good yesterday. Afternoon, Amy, Evil, Senji, Danny, FTNet, Gregors, Fletch, Peter, Roswitha. Never say your name. Chucks, Rico, Gerald, Mumo, how we doing? So basically we had a nice big drop yesterday. So just to recap news from yesterday, there's a couple of bits that happened yesterday which have affected the markets. So the news, this was the news that moved the market yesterday, 7 o'clock. The Fed started talking. So if you look at when the move on the US dollar started, it was there, which is 7 p.m. yesterday. So we had Blinken come out and say the US policy will change if Israel doesn't change course. So there was talk about stuff going on with Israel and the US. But the main sort of market moving event yesterday was the Fed talking about interest rates. So we had this coming out yesterday. Goolsby basically saying he jotted down 2 rate cuts this year, but if inflation continues as it is, we may not cut them at all. Then you got someone else in the Fed coming out and saying the Fed won't cut this year if inflation stalls. Then Mester came out and said we will be cutting rates this year. So basically the usual stuff with the Fed. One says one thing, 10 minutes later, someone else says something completely the opposite. Completely screws the market up. But there's potential for there's 2 potential conflict changes with the Middle East. The US pulling out support for Israel, the UK also pulling support for Israel, which means they will have less weapons supplied, and Israel getting involved with Iran. So if Iran starts to get involved in this conflict in the Middle East, it's going to escalate. Whenever you have escalation in war, we go to a risk-off stance. So the stock markets tend to change course. People pull money out of risky assets, risky investments, and it all gets put into safe havens. So the Swiss franc and the Japanese yen are where your money goes if you are worried, because the interest rates are incredibly low with the Swiss and the yen, meaning that it's a stable environment for your money. So the yen yesterday got a nice big push. As you can see, everything came down hard against the yen. It's continued to a certain extent this morning, not quite as much. It's kind of undone a little bit of that move. And the Swiss franc. So if you look at things like the CAD Swiss, huge drop there. US dollar Swiss, huge drop. Euro Swiss. Yeah. So they piled money into the Swiss franc. So it's a mix of all that news kind of landing at the same time, them saying, actually, we might not do anything with Israel, Israel coming out and saying we might invade Iran, and the Fed coming out and saying we're not going to cut rates, we are going to cut rates, we're not going to cut rates, we are going to cut rates. So the market just basically went into turmoil and pumped all the cash into the Swissy and the yen. So this isn't a safe, this is a safe haven run, but it's not an intervention as some people thought. We had a couple of people in Telegram and Discord saying, is this the intervention move? It's not big enough. It was only about an ADR at 1.5 ADR. An intervention move will be 5 to 8 times average daily range or more even. Could be anything, but that's way too small for an intervention. And we had this morning, the Japanese again coming out and saying, we are watching the FX rates. If you keep pushing us, we will push back. So the Suzuki there, rapid foreign exchange movements are undesirable. We are open to all options to address excessive Forex movements. That was this morning. That was midnight. Then again, throughout the morning, we had some things said. And then 7 o'clock this morning, they came out again. Kishida I will take appropriate action if there are excessive FX moves. We won't rule out any option on Forex action. So the Japanese still threatening intervention. So this afternoon, we have non-farm payroll coming out in 8 minutes, which is the unemployment rate for the US. This is the important part, the unemployment rate figure. If that is down for Canada and US, we will get a pump on the US. If that pump manages to get beyond 200% of ADR today, that will take us back up to the intervention level where the Japanese could intervene. If that pumps down, i.e. the unemployment rate changes upwards, we'll get a drop in the US and there'll be no need for a Japanese intervention. And as you can see on the US dollar yen, we are toying down here still at these lows. These lows we are not interested in going beyond. Yesterday we tried. This morning we tried to break. We got pushed back again. Just about to get a reversal alert long. Just had a reversal alert long, actually. So this is what we need to crack, this level here, which is 200% of ADR. So today, if we get negative movement on the US, I can't see us getting beyond 200% of ADR. We're going to get limit orders triggering there. We've got a large propulsion move here as well to get through, which is kind of what we bounced out of yesterday. So I suspect what we'll probably see today is something along that sort of lines, unless we get a really big positive number or a really big negative number. So we'll see what happens. So that was the news overnight. Obviously, we've got the Canadian unemployment and the US unemployment coming out. So both of those are going to be heavily affected. This morning, only movement we've had this morning is Euro odd. We got an ADR hit on Euro odd. So that pushed straight up into ADR, bounced off of 125 ADR. So if you took an ADR reversal on that today, it was beautiful. So there was your hit up to ADR. That's ADR. Sorry, no, that's ADR there. So we hit 125 ADR. Beautiful reversal alert. Straight back down again. Just get that moving average off. We've had the pound odd also hit ADR to the upside. Beautiful hit ADR. 5-minute reversal alert there. Straight back down. And we had the US dollar yen hit ADR to the upside, but that was kind of, there's this big order came in overnight. So it's not really, it's kind of just undone the whole thing. So it's a bit of a tricky ADR to play that one. But you wouldn't have got an alert. It hit ADR to the downside first, which was 55 pips. So we kind of roughly hit ADR there. We've pushed up into ADR here. So you've got a short here. So good looking short opportunity if you want to get in US dollar yen, if you're not already in it. So those are your ADRs. Mainly that was Australian dollar movement today. So a little bit of movement on the Aussie dollar. But apart from that, because it's non-farm payroll day, market's been flat and sideways. We don't move before non-farm payroll because nobody's willing to put any money into the market until we know which way the US dollar's going, which we'll know in 4 minutes. So those are your ADRs today. Weeklies, there's quite a lot of weekly hits. As we know, we've had quite a turbulent week this week. Lots and lots of movement all over the place. So I got out of some Swissy and some, what did I get out of? I can't remember what I got out of. I did 4.5% yesterday and done 1% today. I can't remember what I got out of today. It was New Zealand dollar yen I got out of today. So took that one off. So that was first entry there, second entry, exit. And Aussie dollar, US dollar I got out of as well. That was a one-hit wonder. So straight in and out. That was an ADR hit yesterday and an RSI extension. So that was your H1 RSI entry. I got out of that one today. I think I got out of something else as well. No, that was it. That's all today. I took off some Swissies yesterday. So Aussie Swiss and New Zealand Swiss I took off yesterday. They were nice, easy, straight in, straight out. Really easy move. Lucky trades basically, straight in. And then 4 hours later, we got the safe haven run. So they all worked out literally straight away. Very nice. Which is why I banked 4.5% yesterday, because that move yesterday, I got into quite a few positions yesterday off of the H1 RSI extensions. And literally every single one of them played out almost immediately, which is lovely. Wish it did that every day. So we will watch. Might watch US dollar Swiss today. I'll open up US dollar. No, I won't. Let's watch Euro CAD and Euro US dollar. So we watch these two basically, and that will give us an idea what's going on with the news. Because obviously we want to see what's going on with the Canadian dollar and the US dollar at the same time. Afternoon, everybody else. I haven't said hello to Robert, Michael, Gina, John. It's time. Kenley, Brian. How would you do, Dee? 2 minutes to go. Well, 1 minute. Smash the thumb, everyone. Chai latte today. Nice. Afternoon, G positive. Is that a blood group? Might need it in a minute. See what happens. Yeah, so not quite sure what's going to happen off this news today. After that safe haven move yesterday, they may well try and undo that, but we will see. So it all depends what the figures come out at. But obviously, as we know, with non-farm payroll, the numbers don't really mean anything. The market will do whatever the market needs to do. It'll execute the orders in whichever direction it needs them done, based on what it needs to do, not what we want or what the news actually is. So that is positive US and positive CAD. Both positives. So unemployment down. US dollar yen just hit 125 ADR to the upside. Not that my chart is showing that. Charts are frozen. Too much data. Afternoon, David. Pound Swiss is killing you. Don't think I can look at anything at the moment. My terminal has totally frozen. Wow. That's a proper overload. There we go. Back to life again. Too many ticks. US dollar CAD ADR. Big move on the US. So numbers basically will be positive, 3.8. So we were forecasting to stay the same, and we got a drop. Unemployment rate in Canada, 6.1. That's a big miss. That's a really big miss for Canada. I'm surprised that hasn't moved further than that. Let's have a quick look at some other CAD pairs. Well, I'm surprised we haven't had more movement on that Aussie dollar CAD on any of these CAD pairs. That should be really weak for the Canadian dollar. We've got ADRs going off all over the place. On the US pairs. Afternoon, Virginia. We'll have a look at the pound Swiss in a sec. Okay, so let's see how far we get with this US. So that figure for the US, better than expected. which is good, but that isn't the be all and end all. We're more interested in inflation at the moment. So although that is a good number and it is bullish US, I suspect we won't necessarily get a massive move on that US dollar. We've obviously had the spike off of the news, but again, we've got that ceiling at the moment up here with the US dollar yen, which is going to struggle to get through. So we'll see if we get any further. We want 225 ADR today out of this. If we get that 225 move, that could well kickstart that yen intervention move. We'll see where that goes. US dollar CAD 125 ADR. Pound US dollars just hit ADR. Downside. Euro US dollar, I think I'm about to TP on that. New Zealand dollar US dollar ADR. So it's holding at the moment. So what happens a lot of the time with these moves, obviously, is we get that kick down. They find some liquidity and then they'll pull it all the way back up to where we were. So good opportunities for fades on these if you want to scalp. I might just take that Euro US off. Profit. Right, look at the pound Swiss while we're waiting for that to figure out what it's doing. So pound Swiss, I assume you're short. I'm guessing from here probably. Difficult. I'm out of this. So there was an RSI extension there which I got a trade on, which I'm out. I was out of. We had a push up then to here. So you would have had a short entry there, which you'd have been out of. If you got in on that one, I got out a break even on that because I didn't want to hold the Swiss. That worked out, but I can't really see how you'd be underwater on this. Don't know. M5H1 RSI 75.25. So you'd have got in here somewhere. Shouldn't really be in drawdown, should you? Unless you got in here and you didn't get out when the profit was available, in which case then, yeah, you're underwater. First entry was 110. 110? All the way back here? Euro New Zealand, ADR. So we got some movement on Euro and New Zealand as well. If you got in at 110... What, there? I guess. You should have been out there. Or there. Or after 2 weeks of going nowhere, you should have just gone, screw it. I don't know why you wouldn't be out on that. Or that, which is where I got out. You should have, yeah. What you need is basically Israel to invade Iran. And then the Swiss franc will come collapse. Everything will come collapsing down against the Swiss franc. Euro CAD ADR. So all the CAD and US pairs ADRs are getting hit. Yeah, I mean, basically, all these Swissies, I got out the Euro Swiss. I got stuck in the Euro Swiss, which is very similar to the pound Swiss, but I bailed on it because it wasn't going anywhere. But at the moment, we've got 2 rejections at this level now. So this move yesterday is obviously a safe haven run. So markets are worried. They start piling into the Swiss franc. That's basically what we need to happen. Basically, is something to make the market pile back into the Swissy. If the Japanese yen intervention happens, the Swiss franc will power up as well. So there's a lot of things going on at the moment that could easily drive this Swissy. It's dropped its interest rates faster than everybody else. Wasn't expected. This is why partly you're in a squeeze on it, because this was the market preempting the news event. So that was the Swiss interest rate change, which we weren't forecast. And this is the market piling into that in anticipation of it happening. However, it hasn't really done an awful lot since the interest rate change. So not as weak as I anticipated it to be. I thought it would take off, but it hasn't. So I think there's a good chance it will come down at some point. Especially if that US dollar, I mean, yesterday the Fed really scared everybody by saying we're not going to change the, I mean, what they actually said yesterday is, I mean, saying that there's a chance we may not change interest rates this year. They shouldn't come out and say things like that. It's rubbish. Obviously, if inflation carries on going up, they will not change interest rates this year. But you know, it's not going to happen. So the markets are just teetering at the moment. When that US dollar starts to come down, the market's going to pull money out of the US dollar. They're going to look for somewhere to put it. Swissy's going to be one of the places they'll put it as well. So I think it's just a case of waiting at the minute. But any kind of conflict will help. Any kind of natural disaster will help. Any kind of yen intervention will help. And at the moment, we're on our way to that 225 ADR level. If we get anywhere up there today, you'll be all right. We'll see. This thing is just stuck. Look, totally stuck. RSIs today. There's nothing to look at on the hourlies today. There will be in a minute. We'll have a load of hourly RSI extensions kick in when the news is finished, when this move's finished. But the only thing you've got extended at the moment is 4 hour on the Aussie CAD. Took first position on that one there yesterday. So yeah, that's very nice extension on the hourly yesterday, and 4 hourly RSI is extended as well, coming up into resistance. So you got a nice resistance. That's the monthly high. That's the 3-week high. So this whole area here at ADR today is a very good resistance area. However, that news we've just had on the Canadian dollar isn't going to help. So good short opportunity though up there. So we'll be looking for that same move again, basically, to come down. Fingers crossed. Give me one sec. Sorry, just changing some orders. But yeah, so that's the RSI extension on the Aussie CAD. We've got Euro CAD also extended as well. That's nicely extended now on the 4 hour. Again, Canadian dollars just had very bad news on unemployment, so that's going to potentially rally for a little bit. But bear in mind, if that US dollar yen carries on going and the yen intervention happens, the Canadian dollar is also going to get affected by that negatively, which will drive this up. So this is nicely extended, and we're coming up into a very nice resistance area here. We've respected multiple times. However, obviously, Canadian dollar, bad news, that could continue to rally for a little bit, but we would expect to get some kind of bounce out of there. And you haven't had a profit take yet on that entire leg. So a bit like this, no profit take whatsoever, V-shaped recovery, no profit take yet on that. Should look for at least a 50% retracement on it, if not that. But today, I suspect that will continue going because the Canadian dollar obviously has just had negative unemployment change. Unemployment rate. So not good. But that's all your RSIs at the moment. As I say, in 20 minutes, you're going to get some more hourlies kicking off. So anything US and CAD related, there's a good chance. I mean, look at that, 150 ADR now, US dollar CAD. That's the perfect storm, US dollar CAD today. Aussie dollar CAD, 150 of its weekly range as well. So this is the perfect storm right now. We've just had positive news for the US dollar. We've had negative news for the Canadian dollar. So bulls and bears acting together. This is going to drive, could get 200 ADR out of that today. US dollar CAD, that's 150 just hit. Out the top of resistance as well. Sky's the limit on that. Could go anywhere. So yeah, big move on that one. Obviously, all the other US dollar pairs, that's pulling back very quick. Look at that, Swiss franc. Some money coming into the Swissy. They're piling into the Swiss again. So that US dollar rallying on positive news, getting beaten back by the Swiss franc. So there's more money coming into the Swiss than there is to the US at the moment. What was I going to say? Yeah, so RSI extensions, you'll probably find you get some RSI extensions lit up on the hourly on some of these US or CAD pairs. Looking through them, actually, I don't think there is. Not quite enough movement yet. Yeah. No, there isn't actually. So not going to be really any opportunities on the hourlies for any new entries today. There we go. So there we go. That's non-farm payroll done. Easy. I see a daily divergence forming on the pound Swiss. I presume you're talking about. And the 4 hour. Yeah. Yeah, bearish divergence. This textbook market structure. It's not, but it's, you know, it's a nice bullish market structure. So unless we get any news positive on the Swiss franc or any reason for the Swiss franc to power up, that's probably the way it's going. But you need some news. Or you need the market to want to unwind some of this 2-month rally, basically, just to get out of some of this move, pulling back into the 24.72 area. Either way, both possible. But yeah, you've got some divergence there on the daily as well. So looking good. Also up at previous high as well. So this is the high from June last year. So you got a nice area here, which is where we turned tail and ran. And this is the first retest of that level, which is probably why you're getting these big wicks coming in here. So they are starting to add volume here at the moment. So good chance that this will pop down from here. But how far? We'll have to wait and see if there's any Swiss franc power. Aussie New Zealand not coming down. No, running again. I posted this one in Telegram today, or Discord, one or the other, looking for a head and shoulders there. Didn't get it. So it's running again. However, we're just testing this propulsion move and we're retesting the reversal alert. So we'll see if this holds, basically. One of these market reversal alerts is going to hold and the structure is going to shift back to bearish. We've got no news coming up on these two. Yes, we have. I was going to say next week. I didn't think we had, but we have. So it's the New Zealand dollar rate next week. Last time they didn't change the rate. So last time we got a forecast on the rate of 5.5 after saying we were going to do 5.5 for every single month. For, since we stopped increasing rates, we said, yeah, we're going to stay at 5.5. They've done exactly what they said. Last time, the market went, nah, don't like it. Wasn't there, actually. It was further back, wasn't it? Back here. So that was the last interest rate non-change. So for the entire month, it's just been pumping. That's where I got in. I got in exactly 1 month ago, Wednesday, when they didn't change the rates. So fingers crossed, when they don't change the rates this time, they will power up the New Zealand dollar. There's absolutely no reason for this to be this week when they did exactly what they said they were going to do. So we'll see. Nothing we can do with it. I'm scaling out basically on this, just taking losses. So got another position on yesterday. We got a nice RSI extension yesterday. This was an ADR extension as well yesterday. So I got into another position. That's nice spacing. So yeah, we'll see where we go. But if that continues to rally and we're back up here early next week, I'll take that one off probably. Just gradually, as you can see, I'm just gradually getting out of positions on this. So, that one gone, that one gone, that one gone. Just getting out, basically gradually scaling out. So I'll remove that one there, probably, just to reduce the lot sizing on it. Ideally, you want to take everything off below the line, because obviously anything you remove below the line moves the line up, which gives you an easier exit. But if this comes down, you look at where it is. I'm looking for a 2 ADR move. That's it. Yeah, we've been pushing for 1 month. We haven't had an ADR hit to the downside for a month. So when this does start, it's going to start and it's going to go fast. We're going to get a good couple of days of solid selling on it. So I'm not too worried about moving my average. I'm more worried about reducing lot size to reduce drawdown. And just take some small losses on it. There's nothing you can do with it. It's stuck. It's stuck in a grind. No market structure. So many of these at the minute. This is the trouble, isn't it? There's just so many grindy stuff. So much. We looked at it yesterday, didn't we? This hasn't actually moved. We had a move. We sat sideways. We ground for 2 days and sat sideways for a week. We had a 1 day move, sat sideways. We had a 1 day move. We sat sideways. We've kind of pushed up for a day and we sat sideways for a week. So there's literally been 3 or 4 moves in a month. That's it, of an ADR. The rest of the time, it's just doing that. Because there's no real advantage. There's no advantage over the for the Aussie over the New Zealand at the moment. There's no bias, fundamentally. Neither of them are changing the interest rates. They've both got massively high inflation. They've both got massively high interest rates. Their unemployment is not good. Their GDPs are poor. They're just the same thing. But for some reason, this time last month, they decided they didn't fancy the New Zealand dollar anymore. What do you do? This time, they will fancy the New Zealand dollar, because last time they decided not to. So if we flip a coin, we had heads last month, so why don't we get tails this month? Market is that irrational at the moment. So we'll see. But they haven't profit taken any of this since the leg started. There hasn't been a profit take move on this at all. You kind of say there was a retracement there, possibly, but that lot, not one profit take from there to there. They are fully long, no speculative shorts at all. So get out of some of that at some point, and it'll be fast. It's the old adage I've said many times. We climb up the stairs, we fall down the elevator shaft. As soon as that profit take starts and one of the banks puts in an ADR hit to the downside, every single banking institution will see their P&L drop. They will then scale out of a portion of that position to take profit on it, which will cause a sell move. The other banks and institutions will see the first move. They'll see the second move. They will scale out of their portion. And that's why it comes down so fast. Because as soon as, it's like, let's say, for example, you're long on this and you've got a P&L sitting up here at 2.5K. If you suddenly one day come on and you see your P&L at 2.1K, you're going to go, oh, crap, that's not good. If the next day your P&L drops down to 1.8K, you're going to go, crap, I better get out of some of this. And you're going to take a partial or an exit, which is going to cause selling pressure. Boom, boom, boom. That's what happens. They're They're human beings and greedy like everybody else. Banks and institutions, when they see the P&Ls drop, they bank it. Just waiting for somebody to press the button. But they need something to do it. And next week, obviously, we've got something. We've got the New Zealand dollar rates. Heaven forbid they decide to drop that rate. If they drop that rate, I'll be out of the lot because that's not coming back. They're not going to. There's no reason. They can't. They're the worst in the world. Look at it. New Zealand dollar. Their inflation is the highest in the world. Their interest rate is the highest in the world. Their unemployment is the second highest in the world behind Canada. There is absolutely no way they're dropping interest rates. And if they do, they need shooting because their economy is just going to collapse. Well, won't collapse. They just won't do anything. Look at their GDP. They're already in negative GDP. They're in a recession. They're in a recession. Their unemployment's through the roof. They've got highest interest rates. No one can afford houses. No one can do anything. No one has got any savings, so they're not making any money on the interest rate, and the cost of living's gone through the roof. They need to sort it out. They're not going to drop interest rates. They could put them up, and if they put them up, we'll be TP'd within a couple of days. But right now, can't do anything about it. Stuck. As many things have been. Imagine if the New Zealand dollar pull the FNB Jordan on us. They won't. Well, that's like I just said. Kind of answered that one before I read it. But the reason the SNB did it was because the SNB have absolutely no reason to have 1.75 interest rate, have they? Yeah, look at their inflation figure, 1.2. Target's 2. They're 0.8 below inflation target, and it's coming down. Their GDP is increasing. They've got nobody unemployed. They're rich as hell. Why on earth would you run a positive interest rate figure? They should be doing what the Japanese have been doing and what they were doing before COVID, running negative interest rates, which is why it's a safe haven currency. But that's why they did it. And this is why the banks started to scale out a bit of Swissy in the run up to that, because there was a good chance they were doing it. I said, didn't I, before it happened? Everybody's waiting for the US dollar to go, apart from the Swiss. They are the ones that could go early because they don't have to wait for the US dollar, because they couldn't give a monkeys what happens in the US. They are their own entity. They've never had a problem with inflation. They've never had a problem with GDP. They've never had a problem with unemployment. They're just loaded. That's why everybody's got a Swiss bank account, isn't it? If you're rich, your money's in the Swissy. Stable. There's a war, you stick it in the Swissy, because they never get involved in anything. It's just the place to be. But we'll see what happens. So that's rallying at the moment. Let's have a quick look at what the US is doing. So US dollar CAD 150 is still holding. US dollar yen, we're approaching 175 now, still creeping up. Pound US holding at ADR. Haven't hit ADR yet on the euro. So there's money coming into the yen. Still good money coming into the yen, look. So this, the market isn't selling the yen. This is literally just US dollar strength. So this is exactly what the Japanese don't want. There's money coming into the yen. The yen is powering up. The US dollar is overpowering them. That's exactly when you press that button. So watch this today. If this continues to creep, I suspect what we will do is you'll find yourself back here in 2 hours' time. But if it does continue to creep, it would be nice to do it before the weekend, wouldn't it? Hit that button. But we'll see. Right, that's all I've got for you today. There's nothing much else to look at. It's Friday afternoon. The banks all start to wind down. We've had the news. It's mixed, basically, for the two. So positive US, negative CAD. As these two move together, they're kind of fighting each other with the news. So I suspect we will probably find that US move unwind, if not today, Monday. So it's not that good news. Yeah. So we'll see what happens with it. Next week, we've got no news Monday, no news Tuesday. So Monday and Tuesday, I will just do a normal analysis stream. I might not even bother with Tuesday, to be honest. There's nothing happening, is there? I might just do one on Monday and have Tuesday off to do coding and research. Because there's nothing happening. I'll see. I'll have a think about that over the weekend. But we've got nothing on Monday apart from Jordan speaking, and Jordan won't say anything because they never do. It's the Swiss bank. They don't let us know anything. If they do let us know something, though, there you go, pound Swiss. If he comes out, Jordan comes out next week and says, we might have gone a bit early on the interest rates. Boom. Everything will come down dramatically against the Swiss franc. So we'll see. But you have got a catalyst there for the Swissy potentially on Monday. Wednesday next week is obviously the big day. Oh my God, it's a massive day, Wednesday. Oh my God, it's interest rate week. It's the first time I've looked at next week's news. So we've got the rates for New Zealand dollar on Wednesday, 3 a.m. So I'll be on and I'll do I might do 2 streams on Wednesday. That's what I might do next week. I'll do a Monday. I'll have Tuesday off and I'll do 2 on Wednesday because we'll want to do an analysis of that ahead of the inflation figure there. And then we've got the CAD monetary policy statement and the CAD rate coming out. So these two shouldn't move, but we will want to see what the impact is. This is the core mover on Wednesday next week, inflation. Yeah. So this is what is going to drive it. If we haven't got above that 152 level on the US dollar yen and the inflation figures go up, rather, not down, go up on Wednesday, that US dollar isn't going to weaken. It's going to strengthen. So that would be a potential catalyst as well. We've got so many news events coming up that could drive that US in the wrong direction. So that's the big one, obviously, because that is what drives interest rates. Interest rates drives the US dollar. The US dollar drives all the other currencies. So this is what we're interested in next week. We got the Bank of Canada rate. That's not going to change. There was no forecast for it to change. We've got the press conference, which is where the movement is going to happen on the CAD at 3:45, 4 o'clock. Then we've got FOMC on Wednesday evening. So this isn't the press conference. This is just the meeting minutes. The meeting minutes don't tend to do a lot. The press conference is what moves the market. However, because those CPI figures have come out, there may be something in there that gives a clue as to future direction. And we might find that we say, actually, it's not going to be June. It's now going to be July, or it's going to be May. If that changes for the interest rate drop, we could see a big move on the US. So it's big day Wednesday. Thursday, we've got the rates for the euro. And then we've got the PPI figures straight after that, 15 minutes later. And then we've got the press conference. So that is where you're going to get the euro move. Not forecast to change rates. Again, we're not going to do anything in the euro until the US has moved. So Lagarde will be saying in the press conference, and we'll watch that because it's good fun to watch the man remove the barrier at the front. If anybody's been in here before, you know what I'm talking about. The barrier man, he's got one job. It's a very important job. He removes the barrier so that Lagarde can enter the stage. And he wears a suit to do it. So yeah, he's on at 1:45 on Thursday. So that will be where we find out what the forward guidance is on the euro, whether or not they're going to move early. They unlikely, but they might do. And then we got the GDP figures on Friday and University of Michigan. So, yeah, big week next week, but all focused around Wednesday, Thursday. So that's where your main movers are going to be. Monday, Tuesday, I suspect you'll find the market will do that, which is all it's doing at the moment, because all it's doing is waiting for us to get those numbers and waiting for us to get those numbers. And if those numbers don't do anything and those numbers don't do anything, that's what we do. We're just waiting. We're stuck in a holding pattern. Can't take off, can't land. So, yeah, I'll put the schedule up for next week, but I think I'll probably do just Monday, Wednesday, Thursday, Friday next week, and I'll probably do a couple of streams on Wednesday. I might do a couple on... Actually, I only really do one on Thursday because it's the afternoon session. So, yeah, I'll probably do Monday, 2 Wednesday, 1 Thursday, 1 Friday. We'll see. I must joining the streams. How... I'm just joining the stream. How's the development on the new ADR bands indicator coming along? It's not coming along. And it's not an indicator, it's an EA. I haven't done anything yet with it. I've been doing a little bit more testing this morning. But I haven't really done anything with it in any more detail yet. It's not the sort of thing I can just kind of whiz out. It needs some development. I started doing some testing with entries on it, just to see what the movement was like. And as I suspected, it doesn't make a lot of money and it doesn't lose a lot of money. But as you can see, you can't because it's moving too fast. Some instruments do get way beyond. This is 4 ADR, that's 5 ADR. Some instruments do get beyond ADR, 5 ADR extensions, but not by much. So I think the use of this will be for people that don't like drawdown, which is everybody really, isn't it? But rather than using RSI, what you'll find is by using this as your initial entry method, your actual number of entries will be a lot lower per position, but your number of positions will also be lower. So it's kind of, I think you'll probably find, and I haven't done any real testing on this to verify it, but I think you'll probably find it's going to be akin to using something like the 85-15 RSI extension or the 90-10 RSI extension. But yeah, as you can see, when we get down into these areas, there are times where you're going to get down into these areas and it's just going to do that and drop exactly the same as it does with the RSI. But it's knowing how far it's going to drop, which is what I want to use this for. I need to get some data out, basically. So, but I was just playing around with some strategy ideas for getting in and out, basically. I was actually playing with, not martingale, but I was playing with some other lot sizing methods, a little bit like you play in a casino, where if you're on a winning streak, you start adding size to your positions and things. So what it's doing here, just ignore it because it will be taking some very odd lot sizing in there. But yeah, so it's in development, basically. But it's like everything. I start loads of stuff like this. These sorts of projects I build to do research, and if nothing comes of it, just screw it up and chuck it in the bin. So it might be I'd chuck it in the bin. I don't know. If there's no discernible edge over anything I've done in the past, everything I do and everything I look at either has to improve something or reduce something in what I do at the moment. So what I do at the moment, I use the RSI, I use ADR and support and resistance, and that's what I've been doing for years. I haven't found anything better. No one can show me anything better. If I find something that either reduces my drawdown, increases my profit, or increases the accuracy of my strategy, I'll use it. If it doesn't, I throw it away, because it's pointless adding more stuff onto this, more confusion, more moving parts into something that works. If I introduce a rule where the RSI has to be extended, but price has to be 4 ADR away from the 72 moving average on the daily, for example, if that increases the accuracy of the system by 1.5%, what's the point in adding it in? It's not making a big enough difference. If I add that in and I find that by doing that, all of a sudden the profitability goes up by 15%, the drawdown drops by 10%, I'm using it. But you won't find very many things that can improve your system or your strategy in that respect, which is why you find people with 5 or 6 different indicators on their chart. They'll use the RSI. They'll combine that with the MACD, and they'll combine it with the stochastics. And then it needs to be below this moving average. And it needs to be outside of that Bollinger Band and then bouncing off of this moving average before I take an entry. There's 6 moving parts. There's no way you're going to get these conditions lining up ever again. So anything you backtest with that strategy is never going to be repeated. The chances of your RSI only strategy having something repeated in the future is small. Add another indicator into that, you're halving it. Add another one in, you halve it again. If you add 5 indicators in as a condition in your system, it's never going to do anything. It's not going to work. You'll never get it working. This is why I find all these ones that, like this one we've got people are using at the moment with this BBMA thing. Too many moving parts. It's a bit like ICT. Show me somebody that's profitable with ICT. There isn't anybody. Show me someone that's profitable with BBMA. There isn't anybody. Show me someone that's profitable with BTMM. There isn't anybody. What happens is people go, hey, this is new. I'll jump onto this. And they system hop to this. They'll system hop to this. They'll system hop. And they'll keep doing it, looking for the thing that works. Nothing works because this thing's random. Nothing that you can possibly put together as a system or a strategy that's happened in the past can produce profit in the future because it's never going to be the same. What you can do is you can look at instances that happened in the past and use them to get into a trade. But if you put a stop loss in it, that is never going to have the same outcome as the past. Because what happens from this point onwards is never going to be what's happened before. Remove that and it'll work. You just need something that happens most of the time and then deal with it when it doesn't. That's what you got to do. But if you have, if I stick a CCI indicator into this and a whatever indicator into it, I've now got 3 moving parts. That's 3 things that can break. At the moment, I've got 1 thing that can break. This thing will either get me in and get me out, or it won't. If I add 2 more things into that, that's 2 more things that can go wrong. People think that adding indicators to a strategy makes it better. It makes it more complex and more impossible to get a robust backtest out. But anyway, 175 US CAD. Still going. I don't know if this is US dollar pushing or Canadian dollar dropping. More like the Canadian dollar dropping to me. Either. Kind of mix of both, really. Not a lot of movement. Look, on this CAD, there's your news. That's where we were when the news came out. This is where we are now. Not doing much, is it? US dollars holding up all right, but this is what I'm interested in. Afternoon, Ismet. Afternoon, everybody else. I will be going in a minute, by the way. You talked a few times about when there was a big squeeze on the Swiss in 2014. Did the broker go bankrupt? Yeah. I didn't lose any money, no. The broker went bankrupt, that's all. Your money is segregated. So all brokers have segregated funds. So the money you give to your broker that is used to trade, they cannot touch it. It's segregated funds. Doesn't matter where they are in the world, whichever regulator they're using, they segregate the money. So if your broker goes bust, you just apply to the regulator to get your money back, which is what I did. I was with Alpari when the Swiss franc peg was removed. And it took me a good 6 months or so to get my money out of the Financial Conduct Authority, who were the regulator for Alpari. You don't lose it. Unless you go with an unregulated broker, then yeah. But if you go with an unregulated broker, you're mental, I have to say. But then some people might be new to trading and don't know they're with an unregulated broker. First time it happens, they will realise what a regulated broker is and they won't do it again. Can you go fishing out your window, Brian? I'm done. Oh, right, sorry, Brian, I'm done for the day. So I've read that comment and I didn't read Brian's comment. I'm done for the day. I need a boat. I need to buy a boat. We are under a statewide flood emergency. Been raining for 2 weeks straight in Pittsburgh. Then you go fishing out your window. Now that makes sense. This Aussie New Zealand just keeps pushing. Yeah, we've already said that. We've had that conversation. It's not though, is it? It's retested a propulsion gap, which has been resold. Yesterday, we broke back down below the previous day's high. Today, we haven't taken out the high. So we are at the moment an inside bar, which is a pause candle. Quite often a predecessor to a reversal. So if you look at the daily chart, this is the first inside bar we've had for a while. Look. So let's go back to here. Low, high, inside bar, outside bar, higher high, higher low, higher high, higher low. Oh no, there's an inside bar there. Bull bar, bear bar, bull bar, bull bar. Pretty much the same candle. Bull, 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 inside bar. I suspect Monday we will at least get a push down. Whether or not, obviously, that holds, we'll have to wait and see. But don't forget, we've got today, which is an inside bar. So bulls have run out of steam yesterday. Look at this. It's a shooting star, basically, yesterday. So bulls tried to rally, got hammered. Yeah, so there's no more bulls left. There's more bears in the market yesterday than there was bulls. Today, we opened up bearish. We're currently sitting bullish, but we haven't even managed to test the high yet. Monday, Tuesday, Wednesday, interest rates. So I suspect what you'll see is that until Wednesday. We won't go much higher than this. So I think you'll probably find if you put stops above yesterday's high, you'll probably be safe. Whether or not Wednesday happens, bullish or bearish, we'll have to wait and see. But market's paused, which is good. Can you please check the US dollar try? No. I know you're pulling my leg, Rahat. Yes, there is a very good pullback chance. Also, I didn't get the exact maths about the first entry. In Bootcamp, you said for a 5K should be 0.03. If you have 10K, it would be 0.08. 20K, 0.18. No, use a percentage risk of your account. So if you use the market reversal alerts EA or the position trader EA, yeah, you use a percentage risk of your account. Yeah, so you risk a certain percentage of your account based on an average daily ranges movement. That's the ideal. So if you're using the EAs, you don't have to worry about lots. It does it all for you. If you're not using the EA, my kind of guide is using 0.01 per $1,000 in your account, or $2,000 if you want to be more conservative. But ideally, you should be trading with a minimum 0.03, which means you need a minimum of 3 to 6K to start with, because you can't do drawdown control on that. You can close a third of that. But ideally, you don't use any of that. You risk a percentage of your account over the average movement of the instrument you're trading, which is why I use EAs, because the EAs does it all for you. You don't have to worry about it. Otherwise, you've got to manually calculate everything. But if you use 0.01 per 1,000 in your account as a guide, or 2,000, if you want to be conservative, that's a good starting point. Definitely don't want those river fish. 3 eyeballs and 2 tails. You live near a nuclear plant, do you? Where do you live, Brian? Springfield? Hopefully, even if Wednesday's negative for the New Zealand dollar, it still falls. Yeah. I mean, if you look at it, you know, the reason this has gone the way it's gone, if you look at the 4-hour chart, yeah, this was the interest rates changing or not changing. what they've done is 1, 2, 3, 4 bull weeks. We're on bull week number 5. So if they did that, because they didn't change the interest rates, there's a 50-50 chance they'll do that because they don't change the interest rates. But either way, they haven't taken profit on any of this yet. We want to pull back. This is what the 2472 are for. Your monthly and your quarterly averages. Yeah. If they want to take profit, they will do it within a month or a quarter. They'll come back to what the average price has been. Because if they've been rallying for a month or rallying for a quarter, when they take profit, they will pull back to the average because they'll take a portion of the position out. This is why the 2472 are such good MAs in a trend. This is not trending. But when you've got a trending instrument, US dollar yen's a good example, obviously, at the moment. When you've got a trending instrument, Euro US dollar ADR. This is why we pull back into this area. Because they're just taking partial profits, usually 4 to 6 weeks apart. So if you look at Aussie New Zealand, where we are at the moment, extrapolate that into the future, you could have a good week of selling, or 2 maybe, to get back into this area. Look at this move here. I mean, this is another news event, look. And then it caused a 3-week rally, which they undid. We've had a 5-6 week rally. It's very, very overdue. And I love the level we're at as well. Look, it's the previous month we sold from. And this is exactly where we've stopped. These are limit orders triggering by the bank at the moment, but it just happens to be 3 days before the interest rates as well. So there's a very good chance of it coming back down. But there's also a good chance that the New Zealanders really screw it up. The Aussies did it 2 years ago. They went with their interest rates. They decided, actually, no, we're not going to bother doing the interest rates. Don't worry about it, mate. We'll be all right. We got sheep. We won't increase the interest rates. Everybody was expecting them to because their inflation was going through the roof. And they went, no, we'll give it a couple of months. Whoops. That didn't help them at all. So we'll see. You never know. Markets will remain irrational longer than you can remain liquid, which is why you get out. Telegram, as of yesterday, buy me. It's a bit soggy, isn't it? Why do we build cities near rivers? Crazy, isn't it? I suppose we needed them in the past to ship stuff in and out before we invented planes. But yeah, this is the problem. I know. Let's build all of our cities by rivers and then melt the ice caps so that we get flooded. On the position trader EA, you still use 0.5 risk over an ADR. Yeah. For the initial entry, yeah. Flooded, yeah. Bad, isn't it? Not good. But hey, we want to go to melt the ice caps? We're all going to have to buy boats. It'd be like Waterworld, wouldn't it? We'd all be floating around on catamarans made out of metal. And there'll be a couple of people with jet skis who have actually got the last supply of petrol. What it's going to be like? Give it 10 years, we'll all be in Waterworld. Anybody not old enough to know what Waterworld is? Google it. Right, I'll be back on Monday. So next week, I'll be doing Monday 8:30, 8 o'clock, probably Monday morning. And we'll basically have a look at everything. We'll go through all the FX pairs. We'll look at what the US dollar's done towards the end of the day. It's exactly the same move as this. Look. Still holding. Yeah, Monday we'll have a look at everything. And then, there's nothing really happening until Wednesday next week. So I suspect Monday, Tuesday will be very, very rangy. And then all kicks off on Wednesday. So, all right. So Uber boats. Yeah. Yes. Invest in anything to do with water if you want to make money. Anything you need, let me know. I will be in Telegram or Discord. Other than that, I'll be back on Monday. Anything happens this afternoon, I'll post as well. But I suspect we're not going to get much else. So I will be back next week. Have a good weekend, and I will see you then. Have a good one.